Good morning. Good morning. 20 dwarves, 20 dwarves, 20 dwarves. In sooth, I know not why I am so sad. The rain in Spain falls mainly on the plains. Let's go. Yes, was the start of my last jam, so here it is again, another dope jam. Now that I give you something that I know you lack, consider me a new jack. Your enemy could be your friend or guardian. I'm not a hooligan. I rock the party and clear all the madness. Anyways, good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, although they could be. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. G'day, mate. I know you're like, man, this guy is late. He sleeps in. I've been up for hours and hours and hours. It's just one of those things like, I don't know if you ever read the book to your kids where you're like, the rabbit versus the tortoise. I think it's actually, the one I read was Donald Duck versus Goofy. Gosh. Donald Duck's like, a minute won't matter. A couple minutes won't matter. Not a big deal. I'll stop and get some food. Anyway, so I'm one of those guys where I look up at the clock and I'm like, dang it! It's almost 9. So I apologize for that. But anyways. All right, so hi, my name is Wayne. It's really nice to meet you. Thank you for being here at Forex.Today. Let me introduce myself. I've been trading Forex for almost 20 years. Before that, I was a reasonably successful entrepreneur in the Silicon Valley. Started and managed many businesses, and then, of course, went on to be a venture capitalist. So tiny little startups growing into hundreds of companies, but I've also managed thousands of people. Right on. Very neat. Before that, Apple, Cisco Systems, and NASA. Cool, right on. So I've been around, I got some skills, I got some baggage, good or bad, going into this thing called Forex. But I like to look at Forex like a business because I'm a businessman. So that's sort of my point of view. I like long-term planning, I like discipline, I like strategy, more than just what's going to happen for the day, although that is incredibly important. But in the context of where is it that we are going as a market. Okay, so that's kind of where I get things going. Where are we going as a market, as a global market, and how can I contribute for us to all get there? So as a trend trader, I prefer not to fight the trend, but instead make it my friend. I prefer to keep my losses smaller than my winners. And if I am so lucky to be on a good trade, I try my best to stay strong and let that winner run and run and run and run and run. So that's a little bit about me. Welcome to Forex.Today. It's a community of 14,000 like-minded foreign exchange traders. We're all here to support each other to get better. This is not a signal service, but I will teach you the basics and even the advanced level part of planning your trades in advance, using both fundamental and technical analysis. And I'll help you with this thing called trader psychology a little bit because I've made more mistakes than you. I've gone through more pain than you, and I can help you get the same lessons without all the nasty, without all the nasty. Now you'll get some nasty, but I'm trying to make it a little bit easier for you because I want you to succeed. Simple enough. Great. Our sponsor of this community up there, the sponsor of Forex.Today, is tradersway.com. So please thank them because they want us in your life and they want you in their life. So they are asking you for a chance to earn your loyalty and respect as a foreign exchange broker. Let me say that again. They're asking you. They're even saying please. They're even making the first move by making this community available to you. And they're like, hey, we just want an opportunity to earn your loyalty and respect as a foreign exchange broker. So maybe open up a demo account, download MT4 or MT5 or C-Trader, take some shots, check out the execution speed. Fast is good and they're fast. Check out the swaps. Big swaps are good. Their swaps are big, right? Check out the spreads. They're narrow. That's a good thing. But just check it out. Play around with it. And maybe after a couple of days, after a couple of weeks, after a couple of months, after a couple of quarters, after a couple of years, maybe just maybe you're like, you know what, this is really cool and I'm going to open a live account. That's all they're asking you for. So please visit tradersway.com and make that happen. Again, it's not a cost, but it is an obligation. No, this is not the plastic shirts. I don't know where they went, actually. I don't know what happened to them. I'll have to check. Yeah, I've seen the future, and I don't like it. So, yeah. So I'm going to make my current future a little bit better than the plastic one. All right. So anyways, welcome, welcome, welcome. So today I would like to start by planning out our week. Well, maybe not start, but we will plan out our week. So I'm going to pull up the Forex.Today news calendar, which is Forex.Today / Forex news calendar. So we'll go through this a little bit later. Okay. Oh, man, sick of Windows. Can't wait to move to Linux. When can we just go to a Linux world? I'm telling you, I'm sick of Windows. How much money have they made? $5 trillion and they still can't make a decent operating system. But anyways. La 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 la. So we'll get to this in a bit. Yeah. We'll get there in a bit. Almost there in a bit. Where are my swing traders at? Right? Linux Mint 19? Yeah. You know, my laptop, my OLED screen laptop, which I love so much, it actually is sitting on that Ubuntu or whatever, which I'm like, wait, that's Linux. So I think they have Windows running on top of Linux. And I'm like, why can't I just have Linux? But yeah, okay, we got some swingers. Great. So let's go through this. Let's talk about the world as we know it. Swing traders. The message I've been giving is that there's lots of reason for concern, technically and fundamentally, as well as based on seasonality and all that kind of stuff. Okay. Was that right, guys? You said Linux Mint, but I don't know anything about it. That's the thing. I don't know anything about it. And it's funny, the thing is all I need to run is MetaTrader. MT4. So that's it. So anyways, let's go back to this. So I'm saying there's definitely lots of risk approaching in the market. And part of it is seasonality. But you remember I downplayed that a lot. This is our live trading group seasonality. Right? This is a live trading group on Thursday, and one of the things I talked about was, okay, seasonality is there for yen strength, but I wouldn't make a big deal out of it. And one of the reasons I wouldn't make a big deal out of it is this year isn't like last year or the year before. You got to be very careful. You don't want to get to the point where you're fitting your trades into an idea. I mean, it's useful information, but you don't do something because of something else. It's more like you would take that data set, you could say the data set of the last several years and say, what often happens? But remember, often isn't always, right? There's something else in there, right? You just got to be careful where you have a strategy, but you have to then confirm and deny it, right? So anyway, so I'm like, okay, there's seasonality there, but I wouldn't make a big deal out of. Be careful, but we are that is there, right? And then what else? We had some tops, but we knew those tops were going to be there. We knew that it wasn't a surprise, right? But there's some downside risk built into that. And then, of course, news, right? There's so much bad news. And then, does anyone remember in the live trading group, and of course anyone else not in the live trading group can try to take another guess, why was last week so down? Like if you look at this huge down, what was another major contributing factor that's predictable that creates this giant, stream of red candles last week? Why was last week so down for these yen pairs? Yes, some seasonality. Yes, some technicals. Yes, some news. Yeah, thank you. Earnings. Pre-earning season. Which starts today, by the way. Okay. So now let's talk about behavioral finance, if you don't mind. Okay. BFIN. Behavioral finance. Will the news be, will earnings this quarter be good or bad? Not rebalancing, nope, earning season, guys, earnings. So, what do you think? Is the news going to be the earning season news? Did companies make tons of money last quarter? April, May, June? Just money just raining out of the sky, huge profits. No. But is anyone going to be surprised by that? You're like, oh, I bought Carnival Cruises for $6. Wait! They didn't make any money. Of course they didn't make any money. They don't even have boats in the water. You're not going to be surprised by that. But you bought it in March for $6 or $8 or $10. So now you're sitting on a $20 stock. You've doubled your money. And earnings season comes out and they're like, it's horrible. It's the end of the world. Yeah, but we already know that. How many people would agree with that? We already know it's bad. I'm just cleaning my glasses here. How many people already know it's going to be bad? So, isn't there an upside chance that it's not as bad? It's not as bad? What does not as bad mean? I mean, it's bad, but right now, let's talk about the economy for a second. Right now, we have 20% unemployment. We're hoping by the end of the year, we'll have 10% employment. Unemployment. 10% unemployment. That's the worst we were at the peak of the financial crisis of 2008. The worst it got was -10. Now we're hoping to get to -10. And so -15 is good news. Woohoo! You see the difference? Okay. Okay. So anyways, going to the earnings seasons, a lot of people already took profit. So they went to cash up here. Now they're sitting on cash here. Cool. And maybe earnings season comes out. It's bad, but it's not as bad. By the way, where else are you going to put your money? Let's talk about this. You have a retirement account with $1 million and you just retired. And you need 5% a year to live. You're going to live on your 50 grand a year. You need it. That's what you're going to burn. This is your burn rate if you're a startup. Okay? You're burning 50K a year because you own your own house. Okay, so you just need some money for food and insurance and medicine, and 3-4 times a year you go on a little trip. So you need 50K, and you got a $1 million. You got it? Where are you going to get it? 10-year T-note? How about a 30-year bond? That doesn't even pay 1%. Where are you going to get your money? You don't have enough money to get into a hedge fund, and even then it's illiquid. You need the income. Where do you get the income? Where do you put your money, guys? You have to live. This is it. This is a real world decision for you. And pay some funds. That's a good one, Brad. I'm with you, buddy. That makes Brad. That makes you like so far more intelligent than almost anybody in the finance world, right? Like, I mean, like, this is why you shouldn't be a money manager. You're too smart, buddy. It's going to frustrate you that you're just selling them products and you're just a salesman. But anyways, the stock market, guys. Stock market. Well, Islamic bonds, that's interesting, but it provides no income. Okay? Right? Okay? So pure mathematics, if you're Islamic, okay, but Sukuk does not provide interest because of usury. Okay? And if I remember right, there's nothing that talks about usury in the Quran, but in many of the Hadith, Muhammad was quoted as saying, so someone observed him talking about the evils of interest, right? So it's not in the Quran, but it is in the Hadith. But so anyway, Sukuk is not going to pay you interest, so there's no income. So that would be similar to a stock per se. I know, right? Pretty fly for a white guy. So, so let's see. So, anyways, I want to get to that point where, I don't know, stay with your trend. Don't believe the hype. Stay with your analysis. Stay with your bias, your technical fundamental bias. And this was an obvious out, and this was actually an obvious in. And you might be making things up as you go. And you're really, really going to suffer from this. So we talk about it every day. Now I'm getting slammed again in comments like, oh, the only thing Wayne does is wow, 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 and blah, blah, blah. And he never talks about the short term, and he only talks about long term, and only does this, and only does that. Okay, well, I'll reinforce the reason I do that. You're missing entire moves if you're not thinking about buying here as you're exiting here. And if you don't get that, your day trading is going to, you'll do all right. I'm not anti-day trading by any means. Okay? By any means. But if you don't know where you're going, you're going to be a very frustrated traveler. In my opinion. Now, maybe I'm wrong. You're like, Wayne, that's totally wrong. Okay, cool. I'm not anti whatever you're doing. I got nothing but love for you. You want to be a day trader? Awesome. I love day trading. I did it probably longer than anyone here, right? I love it. I'm not anti anything. In fact, I keep telling you, do whatever you want, but make sure you have a plan. Okay? But anyways, so here we are on a 15-minute chart. Okay? And this is the buy. Okay? And here's a buy. And if you were a bear, that's the only sell. But it's not a good sell. But, okay, it's not even a good sell, but you could be trading it as a range. But that's that. That's all there is. And if you simplify, that's good for you whether you're trading a session for 4 hours, whether you're trading a day, so you got a day, whether you're trading a swing. What did I do? Click the wrong one. Okay. So, the market opened. Let's talk about the swing. And I talked about it over and over and over again in the last couple of weeks. So let's talk about it again. You wanted to buy this as a bull. The price you were begging for was 74.14. And you had an opportunity to buy it at 74.18. And you knew you had to be at the market right in this moment. Okay? You know that. So, you come to the market, you're like, okay, I want to buy this. I want to buy it between 74.50 and 74. And then we're stuck inside this micro range in here. So I know where my buy line is, my buy price. I know where the support is. And I know I want to be way up here by the end of the week. Okay? If you, and remember last week, I really drew down the idea of preparing this week. And we also talked a lot, preparing, it's not spelled right, but we also talked a lot about front running at the end of last week. And what is the message there when I give you this? When I tell you these two things at the end of last week, what does it mean? I don't know if you ever sit there and say, what is his message? He taught me a lot. We had a lot of different subjects. So there was a lot of fun and singing and dancing and all that. But inside of there's a real message. Well, planning, which is a different form of preparation, and how many people remember when, and maybe this was the live trading group, but I said, be ready, willing, and able. RWA. How many people remember that? And again, maybe that was the live trading group on Thursday night. But I'm like, I understand it's coming down. I believe it's earnings season. And I think you should stay with your bias, line up, have a solid plan, and be ready, willing, and able. Even if you don't think it's going to move, it's your job. How many people remember that? I don't know if it was Forex.Today or the live trading group. But this whole idea, you have to do what you have to do, and you need to be ready, willing, and able to do it. I didn't say freak out. I didn't say dump all the yens. I didn't say this. I didn't say that. I just said know what you want to do and be ready, willing, and able. And I reinforced the idea, you know the exact moment you need to be at your chart, RWA. Okay? Shanghai, London, New York. And I said, there's a good chance nothing happens. But that's not the point. If you are managing other people's money, or if it's just yours, you still need to work. In this case, you need to work for your money because your money is not working for you in the summer. So you got to be ready, willing, and able. And right here, you were in it. or you're not trading properly. Okay. By the way, let's do a quick poll, because I can't do actually a poll in YouTube, which is too bad, right? Some of the comments over the last few days was like, what I'm teaching you is bad because most of you don't think about trading other people's money one day, whether it's friend, families, or fools, or running a hedge fund. Is that seriously like way out of consideration? You don't think that that's your path? Is that true? It's okay. I'd rather know if it's true. Like you're like, no, Wayne, right? Wayne, I only got $1,000 in my account. I'm just trying to make a couple $100 and buy a TV or something. But if I'm talking about something that you don't believe can happen for you, then I should be informed. But um, even if it's, let's say, even if it's not in your realm, you believe like you could never, because of who you are, where you're from, your neighborhood, your people's, I don't know. Let's say you just don't believe it can happen. But the message I'm also trying to get to, one of the major things I'm trying to get to, is the reason for trading other people's money isn't to make a lot of money, because people that think that way end up failing. I mean, you should trade other people's money because you want to take care of them. Honestly, right? People that create a startup because they think they're going to raise venture capital and get rich, they don't produce any value because they're right. They don't produce value. No one's going to invest. There's no value in getting filthy stinking rich quick, no matter what industry you're in. So if you want to create a startup that changes people's life and adds real value to their life or solves a real problem, now you have a business and people will invest into that, right? So the reason you end up trading other people's money is not to get rich quick, because again, just the mindset means you're going to fail, but instead you're going to take care of people. But it also solves one of your problems. You're trading very well. You've been trading consistently with discipline, with low risk for a couple of years, and you're still not making any serious money. Why? Well, if you remember, we did the math last week, because you started with nothing. So you could have 1,000% growth and have $2,000 in your account, and you're like, it's still not any money. Okay? But what I'm trying to get you to is, one of the reasons as a business now you seek capital from investors is that it helps you deal with the desire or the siren call of increasing your lot size. I'm trying to teach you how to keep your risk low and have a long-term point of view. And soon as you start increasing that lot size too quick so you can make some real money, like, man, I've been trading for a year and I have great returns and I'm super consistent, so I'm going to start increasing my lot size because I need to make money. That's the beginning of the downfall. Right? So that's all I'm trying to say. Whether it's never on your path, the message is still clear. Leverage in the form of the size of your lots relative to the size of your money under management. When you increase your lot size too much relative to how much you actually have in the account, because you need to make money, your need to make money will lead to your downfall. Okay, so I used to do a speech many years ago about the last temptation of Christ, where he's walking down the street and there's gamblers and prostitution and alcohol and other, he's surrounded by these sins, and you have to walk the righteous line. And the greatest sin in trading is over leverage. Okay? That's the message I'm trying to get to. So whether you want to trade other people's money or not, I want you to stay small, stay humble, and focus on the long term. Oh, wait, I've told you this every day for 20 years. Think of that. Why would I say that every day for 20 years? It's pretty amazing. Stay small, stay humble, focus on the long term. I can tell you the disclaimer I used, let's say, 16 years ago. Welcome to FX Bootcamp. Let me remind you that the purpose of FX Bootcamp is education. This is not an alert service. I do not make trade recommendations, but I will teach you technical and fundamental analysis with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are, I mean, it just goes on and on and on. Whether or not your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. That's what I said 15 years ago. I give you the short version now. Okay? But listen to the message anyways. So I'm a bull on all these pairs. You know it. I know it. I've taught you. I told you. I prepared you. Everything. Prepared you. Prepared you. Prepared you. Prepared you. Prepared you. Prepared you. All of these. I guess you would have caught it up here. Okay? All of these I prepared you on Thursday and Friday. That's it. What do you think? Is that true or not? Did I prepare you? Now, I didn't tell you it was going to go up, but I prepared you to execute your strategy. Okay? Did I prepare you? Yes or no? And be honest with yourself. It doesn't impact me. Doesn't impact me at all. But if you're honest with yourself, then I'm going to ask you another question, and it should possibly change your life. Because I've been through this process a million times before. Okay? When I tell you things like, the entire market's going to crash the first week of January, and I prepare you weeks in advance. Or I'm like, all the yens are going to take off in the third week of August, and I prepare you weeks in advance. And then what? You don't do anything. Okay? Hey, Oz, you need to calm down, bro. If things are surprising you, you need to back out on your charts a little bit. Okay? But anytime you're like, wow, it means you didn't know. And that to me is the wow. Okay. So anyways, guys, if you didn't do this, if you weren't at your charts at 6 o'clock on Sunday, if you live in the New York time zone like me, or whatnot, then this is where you struggle. You're smart enough, and you might have heart. Okay? But you don't have the discipline. And if that pisses you off, then good. But you need to then follow it up and say, you know what? Maybe he's right. And then you need to follow up and do something. You need to do something about it, right? Holy smokes. Oz, you were like not my best friend and now you're a hater? Wait, yeah. No, it's funny. No, let him say his thing, Jimmy. But, no, I'm just saying, yeah, you gotta, I guess maybe I didn't communicate it well. There should be a plan, I guess is what I meant. Okay. Yeah, so he's probably still listening. I think he can still listen. It's just like one of those things where, oops, that's not what I want. It all should be planned. If you have a plan It's very rare that something surprising is happening, is what I'm saying. Okay, Ozzy, and to everybody else. Of course, I have an ego, but I'm trying to drill home a point too. So I also have to exaggerate for effect. Okay, if you were like my professors at school, you'd be bored out of your mind. So I'm trying to give you very complex lessons and not be boring. Okay. But anyways, so let's do gold. Okay. So gold goes up because the government is spending money. That's all it is. Gold goes up because the government's spending money. There was this collapse because when there's an exogenous shock, consumption of everything falls. Okay, so this is a C level out of the C plus I plus G plus X minus M, right? So we're talking about C, the consumption angle for everything though drops. Okay? Okay. And then from there, you need to make a decision of whether you're a buyer of gold or not. Okay. And on a big chart, of course, okay, it's holding its own. Now, this would have scared the daylights out of you. But, so you have to ask, like, what is the consequence of spending $3 trillion? Plus the Fed spent $2 trillion, right? I think it was $6 trillion total, roughly, right? What's the consequence of fiscal and monetary policy? So Oz bailed? Gee whiz, I need to be more sensitive to people's emotions. So anyways, I have to apologize. If I seem like I'm insulting you or talking down to you, I'm not. I'm an emotional idiot, so I don't really have emotions, so I'm just brutally honest. So I apologize. There's no reason in the world where I'd want to get up out of bed and sit here and insult you. Like, it doesn't make any sense. I already have an ego, so I don't need more of an ego. But my ego comes from hard work. That's it. So I feel prepared, but but I don't feel perfect by any means, right? I never feel that. Every single paper I've ever submitted over the last 4 years, and there's probably 100 of them, never once felt good about them, except even though every one of them I think got an A. Now you're like, well, see, there's the ego. No, it's true. But every one I put in, I thought was beautifully written crap. So I'm certainly not overconfident, but I do have an ego because I do work hard. So anyways, my point to Oz is not, you shouldn't know, you'll never know what's going to happen in the future, but you should have a solid plan, and there shouldn't be a moment where you're like, oh my God, look at that. Because the oh my God, look at that just means you were not prepared. Because someone made that happen because they were prepared. That's all I'm trying to say, right? That's all I'm trying to say. If something exciting is happening in silver, it's because somebody last week had a massive plan to buy silver today. And you didn't. So it'd be surprising to you. If you didn't have a plan, you're like, holy smokes, I didn't see that coming. Yeah, but you know what? Thousands of other people did and contributed to it. So that's all I mean. If you see it and it's surprising, it's because you're not even analyzing it. It must be, right? So I'm not trying to be egotistical, but this is a buy if you're if you're bullish on silver, which is to me a lot like gold. An increase in consumption. So like the government's response. Okay, let's look at GDP again. GDP. equals C plus I plus G plus X minus M. Okay. All right. So the government spends money, okay, and gives it to you. Okay? But they also spent some money, so we'll give it another up arrow. Maybe we'll do this in pink. Okay, the government, there's G, gives you money and gives businesses money. So they get this money, so consumption goes up and business spending goes up. Or at least, in this case, like the PPP and stuff, just keeps I from falling. So let's remove that. So, actually I bar is how you do it for constant. So the government spends money, saved the I, but increased C, because even if you had a job, you still got money, right? The government just gave you money. Put it in your account. Boom. So you go out and buy a TV from Sam's Club. Great. You spent it. I gave it to the local economy when I went on vacation. Great. But anyway, so you get all this, but this is an increase in consumption. And think of it, you know, as Americans all got free money, there's this rise in consumption, but all consumption, not just like the supply and demand equilibrium for oil, but the supply and demand equilibrium for everything. Okay? And apparently everything on Amazon.com, because while this happened, Jeff Bezos made $45 billion personally. Not Amazon. He personally made $45 billion. Why? Because the government, and I'll throw the Fed in there too, invented $6 trillion US dollars combined, right? And a lot of this went to here, or stabilizing the I, and so the consumption of everything goes up. So you take that fundamentally, and you can say, well, okay, I'm a buyer of gold or I'm a buyer of silver. It's just sort of factual. So let's say you don't believe any of that. You're long-term silver bear, or you're a long-term US dollar bull. Now, how many people understand I'm neither of those things? How many people know very factually, like you could have talked to your mama over the weekend and said, you know, my mentor, Wayne, he's bearish on the US dollar. How many people know that? You could have talked to your mama over the weekend and mentioned that. I'm a bear. This is going to weak. Anybody know that? Yeah, it's been a while now too. What, a month and a half? All right, so you know that. Okay, cool. And now if you believe in the increase of consumption through government spending, then this almost doesn't matter. XAG or XAU or a color TV. Doesn't matter. Bart Simpson t-shirts. Doesn't matter. Consumption of everything goes up. A rising tide raises all ships. So anyways, that might form my opinion. But let's say you don't believe in any of that mumbo jumbo, and you're a bear on all of this. Okay? These are all your sell opportunities. Okay? Okay? For the month. And you haven't had an opportunity for over a week. Now you're going to get one, actually. Actually, I should take that back. This was potentially, and this is potentially, if you're a bear. How many understand that? These are all potentials. And by the way, as a bear, you may have lost money on one of these. And you potentially made money on 1, 2, 3, 4 of these. Well, this hasn't happened yet. That you, as a bear, probably made some money day trading this, made some money day trading this, and you lost some money here, and then you made some money here, and then you're thinking about doing it again. Okay? That's cool. Right on. Those are just trade plans. The flip side of that, okay? I don't know about this, maybe. Okay? And the role reversal is simple, right? And of course, now you should be exiting, right? But if you had a plan, you'd be on one side or the other. And I don't even care which one you are, you would have made money. And that's the message I try to drive home. I don't know if I'm right. Every day I come here and we work together, I'm like, I don't know if I'm right, but I know what I want to do. And a bull would be interested in buying these levels. Bears are interested in selling these levels. It's very factual. And we both would have made money. And then here's the hard question. You do something else. And that's where I'm like, why? And I think once you're brave enough, it's not an easy question, but that's going to take strength to ask yourself why. And when you're strong enough to start dealing with that issue, I think your trading will get to the next level. Okay? And I think what it requires is years and years and years of experience, or hours and hours and hours of simulation that replicate years and years and years of experience. Because at some point you'll say your consistency is what matters more than anything. And if you're figuring out, that's the problem. And then you look at Oz, and Oz freaks out. He's like, oh my God, look what's happening in silver. And I look at this like, nothing interesting is happening in silver, except every bull on silver just exited, just walked away. It's done. But Oz doesn't know that. And it's very exciting to Oz. And I'm like, this looks boring. It's very predictable, by the way, right? You're like, really? Who exits at the monthly R2? Everybody. So to me, that's not that interesting. Okay. Now, if you're a bear, you're trying to figure out on a smaller time frame if you're going to be doing something like this. Are you going to do one of these? Now let's look at that. 1, 2, 3, 4, 5, 6, 7 hours. So, do I need to panic, freak out? Oh my God! Oh my God! Right? This is dramatic, of course, but a bear already knew that. And they had prepared a whole day for this. And it's on the monthly M4. You're like, well, of course. And a bear would have thought about it way down here, like, oh, wow, if this gets up to the monthly M4, I'm going to look for it to roll over. And then candle after candle after candle, they're like, oh, man, there's tons of vulnerability here, right? And I wouldn't be shocked if that's an exact time to be ready to sell it. I wouldn't be shocked if that is a London Open. But none of it should really be too surprising. Okay? None of it should be too surprising. Because the way I look at it, and again, let me make sure I'm making my point here. As a bear, you're way down here, and you know you have no choices. You have no options for selling. It's going to be a long time, days, until you get another chance to sell. So where is your first possibility to sell? If you were like, let's say kicked out here. Let's do it here. You're kicked out here, and so now you're like, well, I guess that didn't work. So here we are on the 8th. Okay. Where's the next opportunity for you to sell as a bear if you just got blown, your M3 got blown out? You're like, man, I tried on Monday, I tried on Tuesday, here I am on Wednesday, I got knocked out, son of a gun, guess the market's not bearish. Oh well, I guess I will create a new trade plan at the next level for selling. What level would that be? No, the M3 just got blown out for the 3rd time in a row. Let me do it this way so you can see. Okay. You sold here, made money. Sold here, made money. Sold here, busted out, knocked out. Great. So now you're like, huh, here we are on the 8th. And, well, I guess this ain't bearish now. I got nothing to do until what? Till we hit the profit zone. There's the one major line. Here's two major lines. You know the exact price. And you're like, well, I guess I have nothing to do now until we get to 19. The next one is 1922. This is 1895, by the way. So 18.95 you might sell, and 1922, it's actually 1923 rounded up, right? You might sell. And you are sitting here. So let me put this into perspective. Oh my God, look at silver. Holy crap. Holy crap. That's not that surprising, actually. It stalled out on exactly 1895, the one you planned a day or two earlier. Stalled out, stalled out, stalled out, stalled out, stalled out, stalled out, stalled out. You might have been a bear somewhere in there, because then you drill in even smaller and you're like, oh man, if this double tops, which it did, and this is probably London Open, so you're ready, willing, and able to pull the trigger, and it fell. Well, why the hell not? Now, you don't know. I'm not pretending to be so smart like, oh, I knew that was going to happen. But that's the only place where that would have happened. So if you're RWA, you're ready. If you're RWA now, if this does the same kind of thing and tomorrow this is down, well, I don't know if it is, but I know sure as shit that's the right price. But would it be surprising? No, I wouldn't be surprised at all. Do I know it's going to happen? Oh, I have no idea. Well, I have some idea, like I know why, and I know the exact price. But if it fell, would I be surprised? No. No, I would not. But I'd probably look for this in the future, depending on, what else is happening in the market. But I also know, right? I was a bull here. I was a bull here. I was a bull here, right? All of this is all bullish. These are just role reversals, nothing complicated. But what's the other thing you know right now if I was trading silver? What do you know about 1923, 1922-8? What do you know? What am I supposed to do here? Predict my behavior. What would you anticipate me doing here? Exit. Did you know that here? 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 Yeah. Yeah. So, this should not be a surprise at all, is my only point. Unless you don't even know that that's a monthly M4 and now, monthly R2. Now you got a problem. You don't know where two standard deviations from a weighted mean based on June price action. You don't even know that. Well, then I'm more prepared. I win. That's my alpha. You didn't know it. I knew it. I behaved, in this case, correctly. And it was surprising to Oz. But to me, it's not ego. It's like, well, if I was a concert pianist, I tapped the keys better. I'm not Mozart, but my piano playing sounds more like Mozart than Oz. Right? So anyways, Oz, if you're around, It's just a wake-up call, man. I'm not being rude to you. But if you have an emotional response with that, then maybe it's a great opportunity to learn. I think it's very difficult to learn without emotional responses. I think humans, by and large, are much more emotional than they are intellectual. I think you make your decisions emotionally and then justify it intellectually. I think emotion comes first. Yeah? So, the why part that we were talking about earlier, I think you understand the trade plans technically, and at some point in our career, we all have to work on the emotional side. Yeah, thank you. That's really funny, Joshua. Um, no, but like, yeah. Um, See, honestly, I want you to succeed at this so we can continue to work together. But I want you to be the one that's capable, right? I want you to have the capability, but you have to dig deep inside. These are tough gigs, but the technical analysis is not difficult. Intellectually, this is not that challenging, right? I think if you work really hard for a year or two, you got it. Right? Okay. Cool. So it's the emotional side. Why were you, if you were not at your charts when the market opened, why? That's the bigger question. Why not? You had something. Do you guys remember talking about last week or the week before? Again, I'm not putting you into trade plans, but instead I'm talking about you changing your destiny, not just your destiny, but the one for your family and your lineage. Your great grandchildren are going to be in a better place because of what you're doing now in Forex. Remember all this stuff? And yes, you want to be successful, and yes, you want to have more, and yes, you can do this, and yes, you can see yourself. And then you didn't, and then you didn't, you didn't. You gave up the lives of your great grandchildren. You didn't give up their lives, but you gave up their, the I don't know how you say it, but the potential. You lowered the potential for your grandchildren's future because you didn't show up on Sunday because it was too difficult. Just to look at your charts for an hour or less. That was too difficult. And therefore, that's that. So at some point, I think you'll need to deal with that because I can't force you to do it and I can't deal, right? But if you're going to trade other people's money or if you're going to work for me, that's a basic minimum, bare minimum expectation. Okay? So I want you to think about it. Remember the speech I said, if you want to change the world, you better start right now. And by the way, it's going to be extremely inconvenient. Okay, so anyways, out. There's your gold. Some little bit of, this is a trickier one currently. For a bull, you're buying these dips, but it's not quite right. It's not quite the right place. Bears got this much better. Okay. Bears have a much better scenario here. So we'll have to pay attention. Okay. Because the bullish buy zone is down here. But that may prove to be too low. So there's a lot of vulnerability into that chart. Okay. Yeah. Mayor says, I always feel like I'm too conservative at the market open. Then start with the demo and just trade it. Be not conservative, but trade a normal plan. So like you're sitting here on the market open, what do? Buy it, put your stop down, walk away. Do it. Try it. It's a demo account. Practice. Don't worry about winning and losing. You're trying to teach yourself, it's almost sort of emotionally, right? So so anyways. And then you can do comparison. So open up a demo, then open up your live. Okay? And the market opens. This one, just do it. 2, I don't know how to say this. Do it yourself. Like do what you think. Do your best. Okay? Okay? Just do it and do what you think. Trade it the best you possibly can. And then measure the difference. Use scientific methodology, okay? Just measure which one's better. So again, the market opens, let's do like these yen pairs. I know many of the yen pairs were like that. So let's go back to the yen pairs. Many of them were just sitting in a buy zone. Oh, that's not the right one. Why are they so bad? That's not what I was thinking. What was I thinking? Pivots, dollar pivot. Must be having a brain fart. Must be these ones. Yeah. All right. So these are all 4 hour, 1 hour, 1 hour, 4 hour, 4 hour. Well, I guess we'll put them on 1 hours and zoom in. Okay. And 1 hour. Okay. So you guys know what I was thinking on Sunday, right? Was I thinking up or down? Was I thinking up or down? Okay. Very factual, right? No, 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 no. I'm up, up, or up, or up. Okay? Cool. So Sunday hits, and we're right here. Sunday hits, we're right here. Okay? Sunday hits, we're right here. Sunday hits, we're right here. And Sunday hits, we're right here. Okay. Now, inside of that, I have to draw my buy zone. So my plan was to buy somewhere in here. My plan was buy somewhere in here. My plan was buy somewhere in here. My plan was to buy somewhere in here. My plan was to buy, it's this one or this one, somewhere in here. Somewhere in these 30 to 50 pip ranges, right? That's my plan for the entire week. So the market is open. So we're talking with Mahir, like, you know, he's finding he's too conservative at this market open. I'm like, well, we don't know if that's a bad thing. So on your live account, continue to do whatever you think is right. Plan it out, place your trade, place your stop, and do what you're going to do. But also open a demo account, and at the same time, when the market opens, It's in your buy zone, buy it. The stop goes here. Straight out of the training course. Oh, look, we're right in the buy zone. Buy it. Stop. Buy it. Stop. Buy it. Stop. Buy it. Stop. It's a demo account. What do you care? And do that every week for a year and find out who's better. Just the sloppy entry or your intellectual entry. See, I don't know and you don't know. But that is scientific methodology. You're going to gather two data sets and find out which one is better. Wayne, Kev says, buying yen pairs at market open is a little aggressive, Wayne, don't you think? I'm talking about on a demo account. Oh, well, Kev says, price was bearish. Well, I don't know if I fully agree with that. So therein lies one of the issues, right, Kev? So I'm not saying you're wrong and I'm not saying I'm right, but I don't think I 100% agree with you. Right? I told everybody on Thursday to stick with their bias and be ready, willing, and able. Even if you don't think you're going to get the shot, you have to be there, ready, willing, and able to take the shot if it appears. Okay? And I gave multiple reasons why if you think it's going to come down, it might come down, but it may not change your behavior. We were talking, I think it was Mr. Highvolt, who's a very conservative and disciplined trader. And he's like, and I'm like, you know what? Mr. Highvolt might not get a trade for a month, but he won't lose money. But the idea is you should still be ready, willing, and able because you're still doing your job. You can't just walk away and go to the Caribbean for 2 months sitting on your client's cash. They don't want to pay you to do that. So they pay you to be ready, willing, and able in case it's there. Okay? So now let's go back to the other thing, Kev. So I'm not saying you're right. I'm not saying you're wrong. I'm not saying I'm right. I'm not saying I'm wrong. But I don't think we 100% agree. So anyways, which is fine, but it doesn't make us right or wrong. I'm suggesting here that on a demo account, you test the methodology and compare it with what you're actually doing. And one of them is likely to be more attractive on the long run. Now, here's the interesting thing. That's doing it dumb. That's just throwing it down dumb. You can get better over time where you're risking less and such. But I think the vast majority of the time, people are not even at their charts when they're supposed to be. And that's the bigger problem. And they're not consistent even though they're supposed to. So when I tell someone, do that every single week for a year and then compare the results, it's not the fact that one result is better than another. 99% of people will not do that for a year. And to me, that's the real issue. I could dangle $1 million in front of you and you still don't do it. That's the issue, right? So I'm just trying to shape behavior and thought because I know you can do this. This is the interesting part. I know you can do this. I know you can, and I know you want to, but you still actually have to, right? So if you did this every single day or every single week for a year, 52 weeks in a row, and you come back and you're like, Wayne, I like what I do better. I've already won because I've gotten you to behave with proper trading habits that requires discipline. If you're willing to walk away from the barbecue to do your job, I win. I win. Because now I've shaped your behavior in a positive way. And I know you can be better than just throwing down a dumb trade. Like, I'm a bull, that's the buy, boom, you're done. No other thought process. The interesting part is right now, the dumb version might be actually better. So you're like, well, Wayne, I'm not dumb. This is you talking to yourself, right? You're like, I'm not dumb. I'm like, okay, so you can refine this and do that better than just the dumb version of just dump it or buy it or whatever based on your bias. But the thing is, you got to be there to be able to do it. Okay? If you're not at the right spot, I don't care how good of a basketball player you are, how awesome of a defense player you are. If you're 1 inch from where you're supposed to be, you're going to get dunked. Dunked. Boom! Hey man, I'm the world's greatest defenseman. Yeah, but you were 1 inch away from where you were supposed to be. 2 points, right? My size 13 on your back. Okay? You got to be at the right place at the right time too. And that's often more important than your actual individual skill. If you weren't trading here, you're not a trader. You have to be in the right place at the right time. You have to be able to do that. Okay? Then you can get better. And I know you can get really good. What did Michael Jordan do when he hit like, oh my God, 34? See, before, when he was a young player, he would just bully you. He'd just dunk right over top of you. You're up there, you're defending, it didn't matter. Wham! I have a hop 3 inches higher than you. I'm dunking in your face. Besides that, I get endorsements and the fans love me. So I have every incentive to just leap right in your face and dunk it. But all of a sudden he wakes up and he's like, oh, I got 34 and my back hurts and my knee hurts. And I'm a little slower than all the 18 and 19-year-olds. So what did he do? He taught himself how to be undefendable. He gets you in the corner. He's got the ball. He gets you off balance. Then he jumps the opposite way. And 60% of the time, it went in every time. Just enough. But you still had to be in the right place at the right time and do the right thing. Just carry it up. So he became a better player. So anyways, I'm just trying to make some weird point that 90% of this would be being here. 90% of this would be being here. Okay, 9 here. Okay, this is what you're missing. You're not in the right place at the right time. You show up at the wrong time, but you're really good. Yeah, it's a beautiful thing, right, Reb? I mean, it was beautiful for him to be able to do that. And it was undefendable. You could not defend that. It was on physics, physically impossible to defend. You just hoped he missed. Okay? So anyways, I'm kind of drilling right now the ground strokes, but I'm also trying to speak to you not intellectually, but emotionally. And this is why I pissed a couple of people off today. Intellectually, you got this nailed. You're so smart. You have so much skill. But we got to work on something different. Okay? You got it. You're good enough. So now you have to ask yourself, why don't you do it? Okay? So that's up to you. And I say this to you, well, I don't really know you, but I feel like I'm your friend. Right? I want you to ask yourself this tough question. By the way, you know I'm a ridiculous person. You know that I am ridiculous. So I have dealt with this in the past. So you're like, well, Wayne, great. So ask myself the tough question. What does that mean? Okay. I've asked myself this tough question. Here's what I did. This was, let me see if I can remember, 1997. 1997. Okay. What I did is I busted out a chart. I think I actually did it on Excel. because there was a chart. I can see the actual graph. So I did it on Excel. And I came up with this mathematical formula. I said my emotional intelligence when I was born was 0. I didn't know anything about the world. I don't know if there was good, bad, ugly. I don't know anything, right? So my emotional intelligence was 0. Then if you skip forward to like year 10, I can remember things from year 10. But so here's really one of the interesting things about this process. I went through every year of my life in my mind. What was my life like when I was 10? Was it good or bad? Simple question, but like, okay, well, what do I remember? Where did I live when I was 10? What neighborhood? What was the school like? How did I get to school? Who were my friends? What was my house like? What was my room like? What toys did I play with? And all of a sudden, you're right. You start going through all of these. And by the way, some people just shouldn't do it because they've hidden a lot of skeletons. I've had, an entrepreneur really has to face them, especially if they're raising money from other people. But so I went through that, and I would spend days and days and days thinking about year 10. But I did it for year 9, year 8, year 7, year 6, year 5, right? But my point at this part of the speech is that in year 10, I had more emotional room or variance. My emotional intelligence was so much greater because you can remember if it was a good year or a bad year. You can remember if you failed 5th grade, or you can remember if your family went through a divorce or a death or something like that, and it can impact you. And then I did that every single year up to the exact current. But I would give it a number. Was it good? Was it a positive year from 1 to 10? Or was it a bad year from 0 to -10? Okay. And here's the interesting thing. Then you go through all of this and you plot this. And it helps you kind of answer questions like, if you know this will change your life and you don't do it, why? Well, you might really start to learn the why about who you are. And I'm telling you, it's pretty scary. But then I took this to another level. So I actually had a chart. It plotted, this. But then I asked my mother to do the same thing, where I gave her the blank template. And I said, I want you to go through and think about the year I was born. Was it a good year for me? Not in general, not for her. Was life good or bad? No. For me as a little baby. And of course, I think it was either good or bad, 1 or 0 or something. And every year until, let's say, I don't know how old I was, let's say to 25. Year by year by year. And then, of course, her chart looked something like this. Or something, right? Like different. And then you have to look at the difference and then change your behavior. Okay? So very, 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 very detailed, ridiculous stuff. It took me weeks, and to have my mother do it for me, super weird and stuff. But I learned a lot about who I was, why I am, but also the relationships with others. How, I guess, is what I'm trying, how it affects others. Okay? And that's the kind of thing I would do to say, why not? Now, would you agree that that's ridiculous? An absolute ridiculous exercise. But I did it. And that's not easy. So all I'm trying to tell you is, that's not maybe how you address this issue. I had to address other things like, I was a young leader, starting companies. I wanted to write a book. I had all these challenges. I wanted to fall in love with somebody, or at least for the weekend. I'm a young man driving towards whatever. so it helped me in those situations. But the point is, I'm trying to express to you, I know how hard it is to address this why. Why not? Okay? Hey Oz, I apologize if I offended you. I don't know if you've missed everything else, but if I offended you, I apologize. It wasn't my intention. Now, hopefully you stayed and got the lesson we just went through. But okay, so now let's move over to... I want to go through the calendar this week for risk events. Okay? Okay? every politician. I like how you throw in lawyer. It's funny. Politician, I get. The lawyer part is funny. But well, you know, how about this? How about this? If I said earlier, I don't know if you believe this to be true, but let's go with this idea. If I said you make all your decisions emotionally, or maybe even don't make your decisions because of emotions, but then you justify everything intellectually. Okay? Okay, let's say there's somehow this is true. Then at some point, like you're learning intellectually how to trade Forex. I get you. But at some point, it's a deficiency, meaning it's not enough. Okay? It is not enough. It's a lot, but it's not enough because ultimately you take this intelligence, this technical analysis, this fundamental analysis, but you actually trade it emotionally. Then at some point, everyone here, to find success, will have to address this because it's the ultimate filter. And if you got this wrong, I don't care how smart you are. You're not going to have the results that your intellect says you deserve. Does anyone agree with that? You will say intellectually, why am I not doing better? I should be doing more. Okay? So now we're going to go full circle. So earlier I talked about hedge fund, let's say. Hedge fund, or whatever, a fund. And I asked you, do you think this lies in your future or is it absolutely impossible? Because if it's absolutely impossible, you're going to convince yourself never to do it or even never to even try. Okay? But this idea of a fund is other people's money. Right? And that will help you say, I'm not getting the results I want, so I need more money. So that you can boost your lot size and make more money. Or you just simply leverage. See, either way, it's the same, right? You increase your lot size so that you're trading like you have $100,000 in the account, or you actually raise $100,000 and trade it, right? And one is high risk, one is lower risk. And the reason I spend a lot of time talking about like, oh, well, if you're trading other people's money, you know, it's because I'm trying to get you away from this. Because there will come a point in time when you intellectually say, I'm doing everything right, but I'm not making serious money. I'm not hitting the emotional target. You're not driving the yellow Lamborghini. You're not in the yacht. There isn't girls in bikinis laughing at all your jokes. And you're like, well, I need to get there, so I'm jacking up my leverage. Financial suicide. Or you can say, I need to stay small, stay humble, and focus on the long term and slowly grow my assets under management, or maybe actually, have people invest into me. Either way, either you see the investment part speeds up the time, or you just add more time. And that's why I was doing the math. Whatever you start with, you can't change. But over time, it will grow. So the issue here now is time. But the way you can cheat time is start with more. That's why maybe it's better to take 2 jobs than increase your leverage, because now you can just increase your AUM, but keep your leverage low. Okay? So that's why I talk about that. I'm trying to create very conservative, disciplined business people in this thing called Forex. But then at some point, you're going to need to do this. Okay? So I'll challenge you again. If you were not at your charts at this market open, why? You knew it, and you chose not to. And one thing we talked about in the live group was self-sabotage. Did you avoid it as a form of self-sabotage? Like you're so emotionally distraught on making a mistake. You're so emotionally distraught by maybe having a loss that it's easier not to trade, because if you don't trade, you don't lose. And if you are honest enough with yourself, you will see that. And then ideally, if you're strong enough, you will deal with it. Okay? Okay? Right on. Thanks, guys. So, I mean, this comes down to like, Kev was like, well, I see this as bearish. And I look at this and I say, well, I know what you're thinking. I can see that point of view. And I talked about it last week as being valid, but I can also see this as not being bearish. Okay. And this has everything to do with earnings season. This has to do with not technical analysis, not fundamental analysis, but behavioral finance. Okay. Now the bullishness probably won't last forever or for that long, but to say, well, this is obviously bearish, so if I was at my charts, I would have missed it. No, you would have been a bear and you wouldn't have a trade set up, and that's fine. You could have said, well, hey, I'm a bear and I'm going to sell it higher. Cool, right on. But I can't buy it because it's bearish? Wrong. I'm a bull. I'll analyze it and I see bullishness, but I'm a bull. I've made a decision fundamentally, not technically. So I look at it, I'm like, I'm a bull. Obvious. And again, through a filter, an emotional filter, and an intellectual filter, there's a filter. I only see what I want to see. I'm a bull. That's bullish, bar none. But only a bull would see that. Okay, cool. And the cool thing is, Kev's a bear, or let's say the point of view was it was bearish. So Kev would look at it and say, not at this price, and backs off. Smart. That's the right thing. So we both survive. It's my fear is like Kev says, well, it's obviously bearish. And I look at it and say, well, it's obviously bullish. But the other 95% says, hey, what's going on today? Woohoo! Oh my God, right? That's where their major issue lies, is they don't know what they want. And making it up on the fly never leads to success. Anyways, not on the long run. All right, so let's get on with it. Let me move this to medium and high. Okay, great. Chinese import export. So this is all low, by the way. Right? This is all low. China relies on the world to buy their stuff. So their exports are going to be way down. And now you can start using this as a gauge. for how the rest of the world is doing. So if Australia locks down, if Hong Kong locks down, if 1/3 of the United States locks down, if and Europe is still locked down, you will see all this data in here. And so now, even more than ever, you could use this import-export data out of China as really a canary in the coal mine. It's a little backward looking because we're talking about during the period of what's already happened. And, when the United States opened again, we were buying stuff like crazy, right? Millions of jobs were added. Consumer spending was way up. Retail sales was way up. Everything was good. So we're going to look at this, but we also know things have changed a lot in the last 2 weeks. Okay? So 15,000 people got COVID-19 in Florida on Sunday. Did you know that? Tested positive, which means they were somewhere on Saturday. What happened on Saturday? So you don't hear this on the news. You only hear 15,000 people, they got to shut everything down. Well, that might be true. Okay? 15,000 happened on Sunday, but what happened on Saturday? Because obviously by Sunday, they don't feel good, so they got tested. What happened on Saturday, though, guys? No, Saturday, before the Sunday. The day before they got tested, what was going on? Well, Maida, I'm only reporting what happened on news. I don't know anything about that. And I got to be careful because I never listen to news. But it popped up anyways. No. Saturday. Saturday wasn't 4th of July. The 11th. Yeah, Disney opened. Disneyland! Disney World! Oh, I see! Hi, old man! Why are you coughing? Yeah. It's a scam. The test is a scam. Whatever. I'm not in all this. I still don't know. Are people telling you it's because Chinese people eat bats? Is it still a military facility that released it on purpose? All these things. I don't really know. Nor does it even really matter to me. But I think it's interesting, right? I think it's interesting Disney World opened up and the next day they had their big spike. Right? But, so anyways, don't get into politics here. I don't even think politically that way. I don't. I'm sorry. I'm just a dumb Canadian. I don't really care. As a Canadian, I hate all politicians. Okay? So, yeah, the tests and stuff. I get it. I get it. That's fine. So, anyways, guys, get off the politics. There's another channel for that. All right. So I'm just saying this. We might see this in these numbers. So pay attention to this one, but also pay even more attention next month. Okay. We're talking about economics here. So I said if Hong Kong shuts down, we're going to see that in Chinese import-export data. If Australia shuts down, we'll see that in import-export data. If Europe unlocks itself, because it's still radically shut down, we will see that in the import-export data. The United States was nationally locked down and then regionally opened, then nationally opened, and now regionally locked down again, or locking down. You want to pay attention to this economics because it changes consumption behavior. Also, okay? Also, listen to this, because you don't see it on your chart. What's another reason all these yen pairs are going to skyrocket in the next 3 weeks? Okay? And this is the thing, like, I'm not picking on Kev, but let me go back to Kev's comment of like, this is definitely bearish. I'm like, okay. But remember, I do fundamentals first and then I do technicals, not technicals first and then figure everything else out. I'm fundamental first, technical second. Okay? What's going to happen fundamentally in the next 3 weeks to drive these yen pairs up? I need you to think ahead, guys. I need you to earn your money. Think ahead. I want specifics. Don't say dollar devalue. No. I mean, let's come on. What happens in the next 3 weeks? 3 or 4 weeks. What happens in the near future? Shutdown, yeah, but that's not, we don't know that as a factual change that is coming. There is a freight train on its way. And by the way, U.S. shutdown would drive these down, not up. Where's Ryan? I would imagine in his house. China, end of summer? No. Elections, way too far off. I mean, much closer. 3, 4 weeks, 5 weeks. Let's say in the next 3 to 6 weeks. FOMC? That's a good answer. Not quite. Earnings season started today. But that's not a freight train, though. That happens every 3 months, right? What's the freight train, the fundamental? Something that will likely change either, C or I or G or exports minus imports. Because if it doesn't do this, nobody cares, right? Vacation, sort of, but it's not a date. There's a date. It's an event, right? So we're talking about an event-driven strategy. Like a merger arbitrage. Okay, you got very specific facts and dates, and you can guess on the behavior up until the event. But we don't know the exact date. Election, nope, too far off. Vacations, yeah, not, well, European vacations, sort of. They're good answers. Okay. The free government money stops. Okay. Trillions of dollars. Well is dry. We know the exact day. Okay. So, the United States goes into a semi-second wave lockdown. What happens to PPP? What happens to money, free money in the bank? What happens to small businesses? What happens to large businesses? The PPP runs out, what do? Lay everybody off? Does the government want that? Florida, Texas, California, they all shut down. New York, they all shut down. Connecticut, shut down. Is that cool with the government? We're going to go to from 20 to 30% unemployment. You predict now. Put your brain on. What is going to happen? Give me some alpha, guys. Your alpha, your ability to outsmart everybody else because you can think ahead. Give me your alpha. What happens? Does the money stop? Oh, look, everyone's got the answer now. Government will continue the free money. Government's going to extend. More COVID stimulus, more stimulation, round 2 stimuli. Oh. So do you think another, let me tell you ready? Do you think another 1.65 trillion US dollars is going to come to our market in the next 4 weeks? What do you think? Not billions. 1.65 trillion. Well, you can't have it. This is my alpha. This is my alpha. This is my alpha. This is me. I did my homework. This is my homework, guys. This is me. Which means I'm a bull on this stuff. And if not this week, next week. And if not next week, then the week after next week. And if not the week after next week, then the week after the week after the week after next week. I am long. I am strong. I am confident. I'm an egomaniac. I'm ridiculous. Because I've done my work. I have an opinion. I have a dream. I've seen it from the mountaintop. I've seen it with my mind's eye. So that's why I say, like, I get it. I get it. When you look at this, you're like, it just did this, so I have to be a bear now. Especially if you are a bear. You have to be a bear. You would have sold below 70. This is 74.70, right? You're probably getting ready to sell again at 75. But if you're a bear, you have to do that. You should have done this already at about 74.5. That's true. Technically, right? And this goes back to Kev's comment, right? So I would agree with Kev. Okay, I would agree. That's what it says technically. And I'm like, well, you're one standard deviation from my bullish mean. It's simply, to me, a good time to buy. But you're like, well, but it's bearish. You're like, oh, that's I can see why you see that. That's cool. But I see what you don't see. I'm looking to August now. It's not even on the chart. I'm in August. Now, I might be wrong, which just means a trade here gets knocked out. Too bad, so sad. But I'm RWA. So last week, I didn't talk you into that. I didn't talk you out of it. All I said is be sure you know. Okay, you can't know what the market's doing, but you should be sure you know what you want, what you think, what you are planning for. I drilled that hard. So if you were a bull here, and a bull here, and a bull here, you'd be a bull here. Why? Anything on this chart? No. Why? You think this is going up. And that's all you think, and that's all you know, and I'm totally cool with that. But I'm on the next step. Where did you find out 1.65? It hasn't even been announced yet, Daniel. There are bills in Congress, but none of them are 1.65 T. You'll see. If I'm wrong, I'm wrong. It doesn't really actually matter. But I have an opinion. I'm extremely opinionated. And I'm trying to show you that that's valuable. Okay? And if I wasn't confident, I wouldn't be strong. And if I wasn't strong, I wouldn't be there. Ready, willing, and able. Okay. Let's go through the fun stuff. So there's Monday. Tuesday, blah, 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 CPI. I don't think that's something we're really thinking about right now, but that is obviously tradable. I don't care, like German zoo and stuff. It just seems like we got such bigger concerns. The British stuff, okay, so we got pound moving tomorrow, and then we got dollar moving. So maybe you want to watch pound dollar. You know, if one is strong and one is weak. So if the number is good, dollar's going to be weak. If the number's bad, the pound's... if the number's good here, the pound will be strong. If the number's good here, the dollar will be weak. So maybe you get... If you're lucky, you get one direction. More likely, they counter each other, and you get up, down, and nothing. The giant pop and stop. Jordan, they're going to come out and lie, which is really great. So you come out and watch the Swiss National Bank liars. And then, monetary policy statement out of a central bank. You either read it or you don't read it. Okay? I think you should read it. They're not going to change the interest rate. They're not going to change the policy. But in the statement, they'll tell you what they're concerned about and what they're thinking about. Okay? So you want to read their outlook, but no policy. There's no monetary policy change. There's no interest rate change. But you want to see the future of the world. And they export a lot of cars, for example. And cars are a big part of consumption, both in the actual sale and purchase of cars and the exchange of money across a border to get the cars in. So whether you're buying cars from Germany and flooding the market with dollars and demanding up euros, or you're flooding the market in other countries, whatever. There's that, but then more cars lead to more consumption of gasoline and fuel and all that kind of stuff, right? And of course, eventually more roads and bridges. So you might want to pay attention to that. But they export a lot of cars. How many people here know the largest exporter of agricultural goods in the world? Who's the biggest food supplier of the world? Meaning sending it out. By tonnage. Who is the world's largest exporter of agriculture? Food. The United States of America. Very good, very good. So what's left? Well, you're thinking Brazil, you're thinking Canada, you're thinking China, you're thinking Australia. Okay, great. Who is the number 2? What country is the number 2 biggest exporter of food globally? Number 2. Only the United States of America exports more food than this other country. What is it? Mexico, China, Australia, Brazil. No Canada? Seriously? No one said Canada? Oh my God. Canada dwarfs all these countries. I honestly, I would have said Canada. But Canada's wrong. You'll have to Google this to check my facts, and then you'll be shocked. Come on, a couple more guesses. I'm going to tell you. India, that's a good guess. They produce a lot of agriculture, and it's a very big country, but they consume it all. New Zealand, doesn't seem logical. They have a lot of milk, and they export that, but not big enough. There you go. Not Indonesia. Yes, the Netherlands. Holland. Yeah, I think you guys Googled that, though. You Googled it. But yeah, amazing fact. Amazing fact. A country the size of Maryland. Yeah, I'm pure mathematics. Googled it. Cheater, pumpkin eater. The Netherlands produces more food exports than Canada, than China, than Australia. I mean, the country's the size of Sydney. I mean, what? Yeah. Yeah, Melbourne's going down. Yeah, so you pay attention to that, right? For sure. Which is too bad because they were going to capture all that soybean money, all that, what was it that Australia was going to sell that Brazil was not going to sell. Maybe it's just iron ore or coal or something, right? Iron ore, I think it was. So Brazil locked down, and so there was a shortage of iron ore. So we're like, yeah, Australia, you can sell your iron ore. But now they're shutting those down. But anyways. Right? So anyways, amazing fact about Holland. Well, that's not the Netherlands. Okay. All right. Very cool. Canada on Wednesday, Fed beige book. So again, Canada's not going to change a policy. They're not going to change their interest rate, but read the book. Read the report. Okay? Come on. Will you do this? Read the report. We'll probably discuss these things on the Thursday live group. Okay? But I don't expect any changes, but I do need to read the report. Also, the beige book. Oh my God. The beige book's awesome. Awesome. And I'd say not 95%, 99% of foreign exchange traders don't read it, but you should. There's a great opportunity to be better than the best. Right there. Read that. Cool. Then we go on to Aussie jobs. This is huge. And then GDP out of China plus a press conference. Be there or be square. So you see how stacked we are? From the UK, starts with China, then the UK, then the United States, skip the Swiss, then to Japan, back to the UK, then to Canada, back to Australia, back to China, and we're only on Thursday. ECB now. Oh my gosh. Okay? So they're not going to change their policy. They're not going to change their interest rate. But read the output. Okay? The monetary policy statement and press conference. You can watch it. I think it's just faster to download the crap now and then. Right? And then all the leaders in Europe are going to get together and smoke weed and drink red wine and do absolutely nothing. And then Friday, retail sales out of Canada, inflation out of Europe. Okay, fine. So I think this will be enough just to kind of keep the market going, but I think we'll be exhausted by then. Okay. First we drink, then we smoke. Okay. That's all they do at these meetings. So it's funny, you think they get together and save Europe. That's couldn't be farther from the truth. Europeans are really funny, but they have a lot of history since they spent all their history together. There's so much history in Europe. It's just really, I'm always struck. So there's two moments in my life where I'm in Spain hanging out with a bunch of professional Forex traders. And I give this speech where I think the euro is the best thing ever, and that they looked at everything that the United States did really well, but also can see some of the flaws in creating the United States of America and the central bank and having a currency and such, and that the Europeans are going to get together and make US dollar 2.0. They're going to have a better central bank, they're going to have a better currency, and they're going to have a competitive advantage. And all the Europeans laughed and laughed and laughed. They're like, there's no way that's going to happen. And they all laughed at me, and it was really funny. And I'm like, no, seriously. You guys got this. You can fix all the flaws. And they laughed and they laughed. There's and this is way before Greece and, the pigs. And this is a long time ago. Anyways, I can even tell you. 2005. This is in 2005, and they're laughing at me, laughing. There's no way. And this is the Europeans laughing at me when I say the euro and the ECB is going to be better than the Fed and the US dollar. And they just laugh. There's no way, because they hate each other. Just there's no way. There's just no way that's going to go down. And I'm like, wow. And sure enough, right? I'm like, oh my God, I learned so much about Europeans that day in the hills of Catalonia. Don't even say Spain. So I was in the hills of Catalonia. So anyways, so they laughed at me. And another one time I was in India. I was at the Taj in Rajasthan. What's the name of the pink city? It's at the Taj, a beautiful hotel with peacocks walking around and swimming pools and grass tennis courts. Oh, we had such a great time. Can't think of the name of the city, though. The pink city. Anyways, so I'm having breakfast on this beautiful patio, and then you hear the "Arrah! Arrah!" I'm like, oh, the peacocks in India. India's so beautiful. When you're in the Taj, right? Oh, yeah, Jaipur. So I'm in Jaipur at the Taj and loving it, having this wonderful breakfast. It was already 9,000 degrees at 7 o'clock in the morning. It's almost too hot to be outside. But anyways, I'm out on the patio having breakfast, and I bump into someone, and he's Italian. And I'm like, hey, how's it going? Where you guys are from? And he's like, Italy. And I'm like, oh, Italy is so fabulous. And he's like, oh, it's my country. It's so fabulous. And then I say, oh, I love Italian wine. I mean, the Super Tuscans are nice, but I always go for the Sangiovese. Oh, the Sangiovese, it is the best of wine. If you ever come out of my country, I'll give you a Sangiovese. And I'm like, oh, that's great. And I'm like, but there's some other wines. I also like French wine, in particular the red Rhones, like a Chateauneuf de Pape. Oh, the Chateauneuf de Pape, it's a wonderful, it is the best. Well, it's not Italian, but it's very good. Right? And I'm like, yeah. And so we're going through all these different wines that I like. And I'm like, I like Chilean. I always go for the Carmenere. Carmenere. Or if, I'll stay away from the Argentine Malbec. Come on. But that's just Merlot. But, we're having all these conversations. And then I said, one of the things I actually like a lot is, Spanish Grenache. Spanish wine? I would never. We just went through the whole world, Napa wines and everything, and German Riesling, and we get the Spanish wine. I'm like, yeah, I like their Grenache. Tempranillo's okay, but I always go for the Grenache. And he's like, I would rather die than drink Spanish wine. And I'm like, you know what? It's just, this is why the euro and the ECB has so much trouble. It's just That's that. Just that he would rather die. Like, really, seriously. If I put a gun to your head and like drink this Spanish Grenache, no, pull the trigger. So I'm like, wow. So how do you build a central bank? And you right, and you're talking to the Italians, and the Italians don't trust the Spanish, and nobody trusts either. And like you're trying to do like how do you balance fiscal deficits across these cultures in the European region? And I mean, who's going to save the Greeks, right? Who's going to save the Greeks, right? What, the Italians? The Spanish? Right? All of a sudden, you know what? The Dutch bail out the Greeks and the Germans take all the credit. I think that's really what happens. But, you have all these cultural problems like, oh my God. Just so anyways, those are my two thoughts of how I learned about the European Union. And that played out really well when we hit the pigs and the Greek crisis. It was just absolutely clear that the whole thing was cultural and that there was no solution coming. There was no solution. There still isn't a solution. So pretty funny anyways. So there's my learning process in my life. Cool. Great. 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 But as an economist, I find it all very interesting. And my wife and I can't even remember, like recently we were watching some movie and it took place in Ireland. I can't even remember which one, but, oh no, it was, no, I know. We were watching like one of these international house hunters and they're trying to find a city house in Dublin or something like that. So anyways, they're in Ireland. And that's right. So we're Netflixing, huh? COVID, right? COVID Netflixing. So anyway, so we're doing this international house hunters, and this family wants to buy a little city home somewhere in an Irish city so they could walk around and get flowers and have a Guinness and live a nice little life, right? And they had commented several times about, with the economy being such as it is. My wife's like, what are they talking about? I'm like, well, this got to be around 2007, 2008, 2009. And they were one of the pigs. And all of a sudden, like from an economist point of view, so anyways, this was happening, that was happening, this was happening, that. And my wife's already glazing over. But I said, you know what the best thing about Ireland was? They had a fantastic minister of finance. And so he came in and went, and he did this, and he did this, and this, and boom, Ireland was like the first out. Oh, they had to dump the anyways, and she's like, look, okay, I didn't need the 20-minute speech, but anyways, that's how I roll, where somebody says something and you can put that in a space and time, and there's people involved, right? And you're like, oh, the finance minister of Ireland at that time was amazing. But that's what happens when you were there. And we were there. I was there. We were there. Many of you guys were there with me. But now we don't do stories of Portugal, Ireland, Italy, Greece, and Spain. But there was a time when that was important. So now we have this COVID, and the most important thing is we need to find a way to keep these economies open. We need somebody to give us the strength to get out of bed and do what needs to get done. We need to keep these economies open. If these economies collapse, we're dead. Like, it's 1,000 times worse than COVID. We have to keep these economies open. If you have no money, your neighbor has no money, nobody has no money, nobody has no money, has no money. Like, we have no money, we're all dead. Like, zombie apocalypse, running around the street with guns and knives and other things that we've fashioned out of what we can find, and it's take and kill and steal from each other until all of that's gone, and then it's even worse after that. I don't want us to get there. We have to keep these things open. got to keep these borders open. We got to keep the economies open. I'm really worried. Even apparently, even Biden is talking about Buy America. All that is very, first of all, it's strange language for him to see that because he's just counteracting Trump, but that's what Trump's saying. So I don't know. I guess it's a political move, but it actually, none of it makes sense. And I know you want to support the American economy. I get that. You want to support the American economy, you support free trade. You keep the borders open, you keep people trading. The reason we haven't had a war is because of free trade. A global war. So someone's parents passed away a few years ago, and we were talking about his father, and he's like, yeah, the father was born in such a time where he fought in World War II, Korea, and the Vietnam War. So I said to him, well, how many wars have you fought? Think of it. Very powerful question, right? Let's see. Did you fight in the Vietnam War? No. Did you fight in Iraq? No. Okay? And those wars where you were picked up, scooped out of your high school and sent to the jungle or whatever, right? So we have a professional fighting force that went to Iraq and kicked down doors and killed bad guys, which is a very tough job to do. But what I was comparing it was scooping out kids out of a high school and shipping them off, right? Not a professional soldier. So anyways, we've gone a long time without having to do a draft. And I think we won World War III and World War IV with money. And we need to keep these borders open and trade, because if we're making money doing business together, we're probably not going to kill each other. And the greatest peace on earth, whether it's avoiding war between countries and cultures or providing a safe place and a healthy life for your children, always comes down to money. Capitalism isn't perfect, but it will allow you to live longer, live safer, live more healthily, eat because you eat better food, and ultimately you have a better mental health. You're happier. When they say money doesn't buy you happiness, it's actually wrong. Okay, sure, you can buy a Lamborghini and find out it doesn't make you happy, but money does buy you happiness. It does make you live longer. It does make you physically, mentally, and emotionally healthier. And that's what capitalism provides. The downside of capitalism is people receive this in not an equal fashion. This is why Jeff Bezos made $45 billion in 1 month. But those who are worse off are less worse off in that scenario. It's been proven 100 million times, and no other model has had success. So I pray for capitalism. I pray we keep these economies open. I keep trying to buy from local restaurants. I keep trying to spread the money around. I try my best to keep things going, because if I spend money, it's someone else's income. We need to keep this economy open, and not just this one. I mean, if America can survive on its own, most other countries can't. So we need all these borders open, and to do that, we need to get safe and healthy quick. As fast as we can, we need to get safe and healthy. So I pray for you to be safe and healthy, and I'll see you tomorrow. Thank you for being on my